Does the idea of trading futures intimidate you a little bit? Perhaps you've just been a traditional trader and you're used to spot trading. Today I'm going to take a little look at the difference between spot trading and futures trading to take out some of the mystery for those just getting started with futures. Are you ready? AAX is celebrating their 1-year anniversary by holding competitions, events, and airdrops all month long. Make sure to stop by the website and check it out. I'm giving away $100 of Bitcoin in the month of December with the Holiday Stash giveaway. All you have to do to enter is like and comment on videos from now through the month of December, and a winner will be chosen on December 25th. Good luck, Stashers! Well, hey there, crypto friends! Thanks again for joining me. So today we're talking a little bit about the difference between spot trading and futures trading. Now, I know for a lot of you out there that are already experienced traders, you may think this is a pretty common concept and most people should know this. But that's actually not the case, I would have to say, in particular with cryptocurrency, because there are so many retail investors out there that are getting involved in cryptocurrency that have no previous experience with traditional types of markets. And so therefore, I think that there's a lot of these little nuances that have been kind of carried over from these traditional markets that many people don't really understand the fundamental differences between them. So today, we're going to take a little bit look at the differences between what a spot trading market looks like and what a futures trading market looks like, and why you might want to use futures trading as well over just traditional spot markets. One of the things about this is that I did a video recently about the AAX exchange, which is a futures-focused exchange, and I realized maybe there's a lot of people of you out there that didn't really understand what futures were about and what the difference was and why you might want to be trading futures. So I wanted to dive in a little bit today and take a look at the difference between the two on AAX in particular, and we can talk a little bit about the strategies of using a futures market over a traditional spot market and what the differences are, because there are a few differences here that some people may not really be necessarily aware of, but they're fairly slight. But they do, like I said, it does carry over from some of the traditional type of markets that have inspired or kind of dictate what how these future markets for cryptocurrency and Bitcoin in particular have been built. So let's go take a look over at the AAX exchange here. But before we get started with that, if you're not already a part of my community of stashers, you don't need to have a mustache to join, but you need to love learning about cryptocurrency here with the community, and you can sign up in the Telegram link there below. All right, great. Let's go take a look at futures exchange here, AAX, and what the difference kind of the two are here. So when it comes to futures trading versus spot trading, there aren't a lot of differences, but they can be significant when you talk about, well, what am I really getting myself into when it comes to something in the futures trading bracket versus in the spot trading bracket. So here we are at the AAX exchange, and this is a very futures focused exchange in general. And they have been the sponsor for this month, and so they've been celebrating their 1-year anniversary because of that. And so they got really a bunch of cool things going on. Not only do they have a futures trading competition, but also a spot trading competition, which you can see here on the promotional scroller going on right now. So let's take a look at the spot exchange here, and kind of talk a little bit about this, and then what spot trading really means, and then we'll talk about a little bit what futures trading really means, and look at the screen there. So you can see here in your standard setup for a spot trading screen, you have your chart here on the left. This particular chart is from TradingView, so it may look incredibly familiar to you with the different tools and how to trade out the different time signatures up here at the top, but also doing things like trend lines and text and other things here on the left-hand side. But in general, the screen itself is fairly straightforward, and this is what you're going to see on most spot exchanges. You're going to have your chart here. You're going to have your orders or your order history down below, and then you're going to have your order book and your order screen here, usually to the right here. And so you can see the AX offers limit, market, and stop orders, which are pretty standard. You're going to see across any exchanges. But the difference, one of the things here I'll point out, is very straightforward, right? So we have our limit, we have our market, we have our stop order, and then what you would expect here for trading. You have what the actual price you want to put in as for your limit order, and then how much of that you actually want to do, and then what available amount in USDT that you're going to be buying here. Now, same thing with selling. It's very straightforward. How much you're going to sell, what price, what is the amount of your total available, and then go ahead and press sell. And as soon as something there's an order that matches yours, right, then it's going to sell right there immediately, and you're going to take custody, we'll say, of that actual Bitcoin. So with spot trading, it's really all about the fact that it settles right now, right? So you come here, you have this standard kind of trading experience. There's not a lot of going on behind the scenes, as it were, right? Yeah, it's a fairly straightforward interface for trading. Now, once you put in that trade, and even if it's a limit order, or if it's a market order or a stop order, as soon as that trade executes, you now own that asset, and it's sitting in your wallet, right? You've executed that spot trade, and you own it right there on the spot. Now, to look a little bit of contrast of the difference between spot trading and futures trading, here is the futures trading screen, and you can see it doesn't look a lot different. You think like, okay, well, futures, shouldn't it be a lot different? Like, well, no, not really. You're going to be looking at almost exactly the same type of screen here, with a few noticeable differences. Now, one of the things you'll notice right away is the price difference, right? So here, the price is 19,202. And then here 19,220, right? So you notice there's a difference in price, and so a lot of this, what this comes down to, as far as major differences between spot trading and futures trading, is that the cost here you're seeing is it's a total of the spot price plus what they call the cost of carryover. So the cost of carryover is actually a traditional financial instrument that is kind of carried over from futures trading in the commodities markets and other traditional markets, other traditional futures markets. And so this cost of carry, which is essentially the amount of insurance time to when this is actually going to be called, right? So when you're trading this futures thing, it's essentially the price is one of the things that is getting added on to that. So it's essentially the spot price plus what is being added on as far as what would be your insurance there that covers the time period of what you have right now to what it's going to be if you call it like right at this moment, right? So that's why we see the price being a little bit more when it comes down to the actual spot price. So that's a pretty big difference when it comes to futures trading. You always notice that the futures trading is just a little bit slightly more expensive always, no matter if it's going up or if it's going down, trending. It's always going to be a little bit more expensive, I think, than the spot price here, than what we normally see here on an actual spot chart. So that's one major difference. The other thing is we'll say is that when we talked about actual spot trading, you're settling it right now, versus with futures trading, the main tenet or the difference is that you're longing or shorting this. You're essentially making a bet that at a certain time Bitcoin is going to be at this certain price, and you'll be able to take profit at that price if it is. If not, you may be in a losing trade, and you end up having to pay the difference out of, in this case, maybe a margin call, where margin starts to come into a play here, which is one of the advantages of using futures in general over using traditional spot markets, is that you can leverage your existing capital into a lot greater of a fee. So you can see right now on this market we have options to leverage up to 100x. On your traditional spot market, you're usually not getting that same kind of leverage that you're going to be able to see easily here in the futures market. And so, like I said, these are some of the main differences when you talk about, well, what do we see different? Well, what is the real difference here? So you're not actually getting Bitcoin when you cash out or when you close your position here with futures. You're just getting the amount of profit back less whatever margin you put up, right? So if we're working with $100 and we do 100x margin, and you go up, it goes up 10%. You're only going to be getting back that 10% original plus whatever you had already put up there, which makes it easier for you to be able to make bigger gains, right, with a lot less. And you're only risking your initial margin. So if I put in $100 there, that may get called, and I may lose all 100 of that amount of money, but I'm not losing any more than that, right? So you always have a little bit of greater leverage on your trade when it comes to a futures trading like this. And in particular, we talk about, okay, well, if I'm going to be trading this at a future time, like that's the whole point with futures, is that I'm going to be saying that it will be this price at a future time, and someone will then agree. Well, you say, well, where does that show here on the screen? Well, the difference here is that here on AAX, these are actually perpetual contracts where there's no closing time to these contracts, so they are constantly trading, right? So you don't have an actual end date here with these perpetual contracts. So these are some of the differences here between spot trading and futures trading. And when it comes down to, well, why would you want to be doing futures trading over spot trading? Well, like I said, one of the main reasons is increased leverage, but also too to minimize your risk as well. So if you're already in a spot trade with Bitcoin, we'll say, and it starts to go down, you might be able to hedge your risk with futures by hedging your risk using leverage on a futures trade that will then mitigate the fact that it is a declining asset at that point. So there is a little bit of upside in both ways, where you can grab more leverage, but you can also hedge some of your risk in a possibly a long position or in a hodl position that you have with an asset like Bitcoin. So those are a little bit of the differences there between a futures trading and a spot trading. I know this is a very quick tutorial. I just wanted to get that out there for those that may not have experience with the futures market versus spot trading, or may not know the difference between the two, but outline some of the differences there, as well as some of the advantages that you have in futures trading. And so if you guys want to check out futures trading, you can go to the AAX exchange that I've been promoting this month, and you can go check, sign up for an account there and go start trading futures for some of the lowest amount of fees here in the cryptocurrency industry that I've seen for futures. So, all right, well, that's all we have for today, folks. Until next time, stash that crypto, friends.